What's up, everyone? It's Sheletta. I'm here getting a phone for one of my newly minted teenagers with Xfinity Mobile. They've got great options, affordable plans, and solid coverage that works for our whole family. With Xfinity Mobile, my daughter can stay connected with me wherever she goes. And did you know when you sign up, you can get an extra phone line free for a full year? Switch to Xfinity Mobile today for more savings, more smiles, and more ways to stay connected.
Hey everyone, welcome back to another episode of the Financially Fit Podcast. I am your host, Andre Creighton. I'm always excited to be here with you all whenever we have a time to break bread and just talk and really help set you guys on a pathway to increasing your knowledge on your financially fit journey. I'm always excited about that. I always say this podcast is not a podcast that's going to get you rich overnight, but if you're maniacal every single day and you're willing to work towards those goals, you will get there. This is a marathon, not a sprint. So everything that we talk about in this podcast is meant to give you information so that you can add that into your files. And then, when the time is right, when you feel like you need to access that information, you have it readily available to continue on your path. So with that being said, today we're going to talk a little bit about investing. We're not going to get into all the intricacies of what you should be investing in as far as companies and things of that sort. I am not a licensed financial advisor. By trade, I am a CFO. I do quite a bit of investing myself, but I am not a licensed financial advisor, so I do not give financial advice. So what I will say is everyone's at different points in their journey when it comes to investing. There's no right time or wrong time to start. At the end of the day, we just have to get started, right? I actually didn't start investing really individually until I got into about my mid 20s. I'd been in the workplace for a few years. Obviously I had like a retirement, but I wasn't managing that. It was being managed by whoever the third party provider was that we were using. They were rebalancing my portfolio, et cetera, et cetera. But I've gotten really big into trying to continue to equip myself with knowledge to be able to win this game. Because that's what it is. The stock market is a game. But it is a game that is set for all of us to win. If you have patience, which is the number one most important thing when it comes to being in the stock market, if you have patience, you will do well. If you are someone that's impatient and you're just looking for a quick turnaround, this is not this place for you. It's just like going to casino and gambling, right? You may get lucky, you may hit on a stock, right? But if your overall strategy is to get very quick wins, those are also going to come with very quick losses, right? So just a lot more risk, and we have to know what our risk appetite is. So with that being said, let's dive in. So where do you start? Many of you may not actually be trading stocks or have a buy and hold portfolio. The key is just getting started. So first thing I always say is you want to evaluate what your risk tolerance is. You want to know, because the market in the stock market, especially if you're investing in individual stocks versus like an ETF, there's going to be a lot of volatility, especially in those that are not large market cap companies. So you think about like your Apples, your Googles, your Amazons, companies like those are going to be very safe investments for the most part because they have really good fundamentals. So you'll hear this word fundamentals often. When I'm talking about fundamentals, I'm talking about the financial health of their business. So when I think about the fundamentals of like an Amazon, right? What I'm looking at is I want to see how much free cash flow do they have. So free cash flow means how much money do they have to be able to use to deploy into their initiatives, whether it's other projects or innovation, whatever it may be. How much money do they have after revenue and expenses to be able to use for those endeavors. And we find that those large cap companies typically are in a very, very good fundamental place. Um, Obviously, as you get to kind of the all the way down to like the small cap companies, some of those are newer. Maybe they just IPO'd, so there's a lot more risk. Like they've figured it out, but now they're in that point where they're scaling, like they're in super growth mode. So maybe they're investing a lot of working capital into various projects. And that can be risky, right? Depending on how it's perceived by the marketplace and by the consumers. So you just want to have a good balance there. So evaluate your risk tolerance. If you're someone that's going to be looking at this every single day and it's going to pain you to see the volatility of the market in a downturn, then maybe you need to invest in some ETFs instead of individual stocks. Or maybe you need to focus on companies with very good fundamentals and less on some of those aggressive small cap companies that could potentially have bigger returns, 5, 10 years from now. So there's lots of ways to work through what your strategy is. Given a little background on me, I tend to be a little bit have a little bit higher tolerance for risk. Um, my belief and my strategy has always been that you don't lose until you sell. So even in a downturn, I'm buying more stock. I'm bringing down my average costs in a stock, especially if it's a stock that I believe in. I tend to not try to sell stocks off in a downturn because I just feel like um, when you do so, uh, it's typically because you've kind of deemed that stock worthless, or you don't see them maybe turning the corner, or maybe a huge project that they were working on kind of has been a disaster. I'll give you an example. Um, so I don't remember the exact year, but like Target's a really, really good company, right? And they tried to expand into Canada a while back. So they did this mass operations into Canada, and it was a complete disaster. Target did not stick with Canada, with a lot of the Canadians. It was, and I was listening to this podcast once, and they're talking about kind of that disaster of it, and people in Canada just live differently than Americans, right? A lot more people in Canada are taking the bus or walking to work, et cetera, or walking to get to places, or the train or bus. And think about like some of the core business of Target, right? At the core, Target is such a great company because, um, from a consumer standpoint, because they not only have a grocery store, but they sell everything under the sun, from electronics to apparel to some home goods. So the thought process for Target is like, okay, well, we know that people need to get groceries. These are everyday things. But you know what? While you're here getting a grocery, why don't you come look at this 70-inch TV as well, right? Well, that didn't work in Canada because people are taking the bus, they're taking a train, they're walking to work. Think about yourself getting on a train or a bus or walking with a 70-inch TV. It just doesn't work. Now, that's a very far-fetched example, because there's obviously many other things that Target sells other than TVs, right? But I'm just giving you an example of how, you know, this was a project that didn't work. So think about those investors, if they were listening to Target's quarterly earnings calls prior to making the investing in this project into Canada. A lot of people are probably very excited, and a lot of people are probably invest in that. And then, at some point, it turned into a disaster. They divest, obviously, in those businesses across Canada, and honestly, the stocks hurt. Um, took a little bit of a tumble because of it. During that time, there probably were a lot of people that were in a lost position. In my position, if I had had Target during that time, I would have likely just bought more, because my belief is that they're going to turn it around. This is just a roadblock, right? So that's the strategy that I like to have. They call it dollar cost averaging. I like to just continue to bring down my average costs. It's a very much a long game, and that's why we talk about having patience. So let's unpack that a little bit. Patience in the marketplace is so important. Um, it is the one thing that is going to help you get to that generational wealth. It's just having that patience and understanding that this is a long game, right? This is a long game. So there's a cool stat about the S&P 500 returns is green 54% of weeks, 63% of months, 74% of years, and 94% of decades. So let that sink in. Like for the most part, 94% of decades, and it typically returns about 10% on average. So if you think about that, like the stock market is meant for you to win, right? But you have to know that this is a long game, right? It's a long game. It's going to take time. So where do you start? There's a couple of different places. When I first started investing, I started with ETFs. I just wanted to understand how to invest in stocks, really get it ability to have something a little bit more safer that's not as risky. I mean, there's still risk in it, but for the most part, ETFs are a combination of a bunch of different stocks. So it really is a diversification of stocks, and it allows you to take a little less risk because of the diversity in the stock. So there could be an ETF that has Nvidia, Apple, Amazon, Palantir, uh, so on, Netflix, so on and so forth, right? And they'll each have a percentage of that um, ETF. Well, if Nvidia is doing bad and Palantir is doing bad, but maybe Amazon's doing well, sometimes those ebbs and flows balance each other out. So that was a good place to start for me. I started on this app called Stash. I felt like it was very intuitive, really in what helping me learn the stock game. I also like too that the cool thing about ETFs is you can see what the top 10 holdings are, right? You can see what the holdings are in the ETFs, but I really focus in on the top 10. So look in those ETFs, see what the holdings are, see what the percentages are, then do a review on those companies. As you're looking through multiple ETFs, find the consistency, right? I think ETFs tell you a lot about the stocks that are maybe good ones to individual stocks to do research on and maybe think about investing in. So that's a good starting point. I've actually moved on from Stash. Like I still do some stuff there. I have a little small portfolio for my son who's 3 years old on Stash. But I use Robinhood now. I know a lot of other people use like Charles Schwab or um, JP Morgan or Fidelity. I mean, all of those, Raymond Edwards, or sorry, Raymond James, uh, like all of those are great platforms. I personally like Robinhood because I feel like it's still very intuitive. It allows me to do some charting. They provide a lot of news updates within the app on whatever companies you're watching or investing in. And then also I have the Robinhood Gold card. So what that is essentially is a credit card that gives me cash back that I can use on, flights, I can use on hotels, but also I can use that to invest in stocks on Robinhood. So I've done something where I've set up pretty much all of a certain part of my reoccurring bills that, I would pay with my own money on my Robinhood credit card, and then that gives me some cash back to be able free money basically to be able to use in the stock. So for instance, like last month, I got a little over $200 of free money just for utilizing the credit card for things that I would have already spent with my own money. So someone once told me that uh, one of the most important things in life is when it comes to finances is utilizing other people's money, right, and not utilizing your own money. So I think that's really really important. I think it's being strategic on how you do that, and making sure that you can obviously fulfill those obligations. Um so yeah, so maybe let's talk about a little bit about what I'm investing in today. So let's see here. So I'm looking at my stock portfolio here, and some of the things that I'm investing in today. So I have some stocks in Nvidia. Nvidia is probably my biggest holding. So what Nvidia is they do semiconductors and like chips. So you can think about like you know any of like your PCs, things like that. Like they help create the chips that go into those softwares. So very important company to have, in my opinion. Um, I have a pretty decent holding there. Palantir is another one in the same space, a little bit more less known than NVIDIA. I think that people are starting to figure them out. Palantir is actually selling higher than NVIDIA now, so they've made a nice little run recently. And then I have your traditional, like I have Google, I have Amazon, I have Tesla, and I have Disney. Disney's another one that I like. I feel like it's a company that has very strong fundamentals. They're not going away. They've been around for a very long time. They continue to reinvent themselves, and they will always be a household name for bringing families together. So I just really like Disney. And then the last one, there's a couple other there on my watch list, but this is what's in my buy and hold portfolio right now. The other one is Lucid. This is an interesting one. It's kind of one that's like my riskier play. It's trading at about $2.49 today. I have quite a bit holding in it. It's a small piece of my portfolio. It's about 10% of my portfolio, so not a large amount in comparison to the other ones that I have. But what I will say about this is I think that they have potential to be the next Tesla. Um, they have, especially with Tesla being under fire, with Elon and his government stuff with Doge, I think that there is a lot of potential for Lucid in the years coming. They have just purchased a new or acquired a new facility, which I think is going to give them a really good opportunity to catch up on stockouts. So people that have requested cars that they have not yet been able to fill. They only have 2 lines of fleet today, but I think there's tremendous opportunity. This is probably a 10 to 15 year play for me, and I'm going to continue to buy more stocks in them over time. Um, the other thing, so when we talk about buy and hold, buy and hold really is your patience portfolio. So buy and hold for me is, those that I tend to keep it between 7 to 15 at the or 7 to 15 companies at the most. 15 even feels like a lot to be able to manage. If you're doing more than that, like you're probably in too many, and there's no way that you know exactly, the ins and outs of all those companies. You need to know the fundamentals. You need to be able to listen to quarterly calls. You need to be able to do your evaluations of any companies in your portfolio. So I try to say between 7 to 15 companies. And yeah, I'm excited. I'm excited. Right now is a great time to buy. The market has been very volatile, and I think it will continue to be volatile. It shows that whenever the new administration gets on stage and says something, whether good or bad, the market tends to run with it, whether that's down or up, right? So I'm excited to see what happens here over the next few years, over the next few months, and continue to invest accordingly to build the wealth that I need. So, with that being said, hopefully you all learned something. I know this is a lot. Honestly, this is a topic, investing, where there's so many things that we can talk about. We're not going to get to everything in a 20-minute segment. So we'll continue to talk more about investing and some of the things I'm seeing as we continue down this path. So with that being said, thank you so much for rocking here with me today. I'm your host, Andre Creighton. Thank you so much. I look forward to seeing you all on the next episode of Financially Fit Podcast. Take care. Deuces.
know Sheletta makes you laugh, but did you know Sheletta Brundidge can also make you think and boost your business? Media personality, activist, and comedian Sheletta Brundidge founded Sheletta Makes Me Laugh to celebrate and share the best of Black culture. It's a podcasting platform. You can download 10 weekly podcasts hosted by African-American subject experts at ShelettaMakesMeLaugh.com or wherever you find your favorite podcasts. ShelettaMakesMeLaugh.com is also a production house, creating broadcast-quality commercial content. And Sheletta and her team of storytellers create powerful promotional campaigns to get businesses the brand awareness they're looking for. Some of Minnesota's top businesses trust Sheletta, and you can too. Get out the word about your events and products and get in front of communities of color with ShelettaMakesMeLaugh.com. She's got the power to help your business.
When I was introduced to Bremer, I really appreciated it. It was more of a relationship. The support that we have in project-based lending, it's emboldening us to go after larger projects. That is a game changer for a small business. The resources and the support from Bremer Bank is exciting that I could stay with them forever. Sometimes when you're working with bankers, they relish the fact of saying no. With Bremer, it's like they're finding a way to say yes.